Hello, investors. It's Don Vandenbord, Senior Portfolio Manager with Revere Asset Management. Today is Wednesday, December 27th, 4:44 p.m. Eastern Time, coming to you from St. Augustine Beach, Florida, with tonight's Revere Market Insight video. State of the market, we're in an uptrend since the November 1st and 2nd follow-through days on the major indexes. Check the trend gauge over here. We've got the much coveted 4 green arrows over here. This means that all 5 of the major indexes that we track are above their short-term 21-day exponential moving average, above their medium-term 50-day moving average, and above the long-term 200-day moving average. And we've got nice cooperation from the first line there, market leaders, also showing a green arrow. So what happened today? Well, strength from November and early December leading into the Santa rally. That's the most bullish 7 days, 7 consecutive trading days is what I should say. The last 5 trading days in December, the first 2 trading days of January. The Santa Claus rally. A lot of people thought we front ran it and couldn't go higher during this period, but we've continued to just grind slowly higher now for the 3rd straight day of the Santa Claus rally, actually the 4th straight day if you count the prior day. Mixed as far as the sectors went today, but all indexes that we track making higher closing highs. And here are the numbers. Big 7, pretty common theme today. Nothing really stood out. Most everything up from capping at about 0.3%, or in that area, 0.2 to 0.3%. Big 7 up 0.31, led by Tesla, which broke out of a little shelf area, up 1.9% today. We took a small position, starter position in this. We'll take a look at that chart momentarily. The RG8 up 1/3%. S&P open flat, traded in a tight range, ended the day up 0.14%, equal weighted, up just slightly less, 0.1%. NASDAQ 100 up 0.2, equal weighted, also up 0.2. Dow up 0.3, mid caps just barely positive, 0.06%. Russell 2000 small caps up 0.34%, led by bonds. The global diversified 60/40 stock bond index up 0.42%. In-house GROTECTION up 0.30%. Let's get to some charts in the tail of the tape. We'll start with the S&P 500 here. And you can see since the negative reversal that we had on 12/20, we've just recovered all of that now. 4 straight up days, little by little, lighter volume because of the time of the year, but continuing to make higher highs as we grind toward that 4,800 level on the S&P 500. Yes, still extended from the 50-day moving average by 6.6%, but any attempt to sell off has been bought. Any attempt to go higher is sold, but then some strength comes in. Let's take a look at a 10-minute chart here, and you can just kind of see grinding higher. Try to break out here. No, we're too far extended. Pull back. Try to break out here. That was late yesterday. This was 1 o'clock today. No, we're going to pull back. Try to run it into the close. Well, we'll see what tomorrow brings, but the last 2 days just biased to the upside. Let's go to the NASDAQ 100, where we're seeing a very similar thing. This is at all-time highs. S&P just barely shy, but making higher highs just like you want it to see. Dow Jones Industrial Average. Stop me if you've heard this before. Higher highs, up 3 of the last 4 days after bouncing off the 8-day exponential moving average. Not showing relative strength, but that's typical when you have a broad tech-led rally. MDY mid caps making a higher closing high, and IWM small caps making a higher closing high, putting that 200 level in its rear view mirror and trending just nicely above the 8-day exponential moving average. How about the VIX? VIX is, some people say it's broke. It's not broke. It's getting tighter, or it's getting lower, and that is signifying what the VIX does is look out 30 days, and there's a rule of 16. You just divide where it is by 16, and that's your expected volatility on a daily basis over the next 30 days. made a new recent low on volatility on the S&P 500, down it is 0.72%. ATR on a daily basis, and the VIX is confirming that, not making lower lows yet. Had a few spikes over the last couple of days, but trending below the downtrending 21-day moving average, just like the market is trending above the uptrending 21-day moving average. UUP, the dollar, we've got a request in to fix this gap down by MarketSmith, but they haven't fixed it yet. But the important thing to note is that the dollar continues lower. That's a tailwind for stocks. And how did this carry over to gold and gold stocks? Gold stocks making, or GLD making a higher high, trying to break above that 2090 level. 192.59 close here after the undercut and reclaim of the 21-day moving average, showing a bit of relative strength, up 0.45%. Gold stocks also higher closing high over the past couple of months relative to that anyway, up a percent. And silver not making the higher high. It's been lagging lately. Should probably just, does anybody care about silver? Maybe I'll just stop mentioning it unless something standout happens. Gold and gold stocks are enough to focus on. Bitcoin up 3% today. The Bitcoin complex, these are all the stocks that are tied to blockchain, and Bitcoin are just going crazy, continuing to make higher highs. We're using coin to play that, as well as we still have a small position in BITO. Let's flip to bonds now. The broad bond index up, higher highs, higher recent highs off the lows. You know, if bond prices are making higher highs, that means rates are coming down. The market generally likes that, and it has been. There's BND, TLT, the long bond up 1.77%. That means the yield's going to be lower, as you're about to see, down 2.42%, breaking up below this little shelf here. Good news. If you've got something tied to interest rates that you're paying interest on, and TNX down 2.5% today. Feel like I forgot something, but no, checking my list just like Santa does. That's everything. Let's get to the tail of the tape now. You can freeze this. I'll hit the highlights if you want to go through it in detail. Santa Claus Rally Day 3, the average of the 7-day range, I've said it before, up 1.33%. Maybe I'm putting too much emphasis on this, but since it gets so much talk this time of the year, and we've been up nicely over the last 2 months, doing a little bit of focusing on it, but we're up 0.73% over the first 3 days. So 3 days down, 4 days to go. 4 straight up day, 4th day above the ADMA, 38th day above the 21-day exponential moving average on the S&P 500. How about sectors? Bitcoin and the complex dominating. Gold and silver stocks today good. Biotech strong, real estate strong with the lower interest rates. On the downside, yields, the dollar, oils, and uranium portfolio. I mentioned yesterday, we probably would only be buying something new if we saw some volume and a catalyst. We saw a catalyst today, Tesla, with announcing a redesigned their most popular model in China that spiked the stock, broke out of a little wedge, and we bought a starter position in that, raising our adjusted beta 1.59 to 1.67. What is adjusted beta, Don? Well, it's a combination of the ATR and the beta, and a formula that we use to calculate overall percentage of a portfolio. We hear a lot of talk in growth investors. I'm 80% invested, I'm 60% invested. That doesn't quite indicate how much risk you actually have on. So we evaluate risk using those two parameters, beta and ATR, on everything that we have, every position that we have. We're still back testing some minor changes to the formula, but for now it gives us a good idea. At 1.67 means we've got 1.67 risk times the S&P 500 when you factor in volatility. Bottom line, Santa Claus Rally, day 3 of 7. Sectors were mixed, but the index is all green, including the S&P and the NASDAQ 100 making new year-to-date and recovery highs, and in the case of the NASDAQ 100, all-time highs. So let's go to Tesla, then we'll hit some individual charts. So you can see, let's go to a 15-minute here. It's actually better if you look at it on the 30 minutes. So above 260, let's draw some lines above 260 here. We had lower highs, higher lows forming a triangle right at the beginning of the day with volume. We saw a breakout above that level. Didn't really make any progress above that. In fact, we're down about $2 from where we bought it. But the catalyst in the early heavy volume much heavier than yesterday, still below average, but due to the time of year that's factored in. So basically a breakout above 260 for Tesla now. Minor relative strength showing also over the last week and a half. So we took the starter position, and we know that this stock goes through periods when it has extreme outperformance on a relative basis, and we want to be in it if we catch those times. And if we don't, we'll, as always, be looking for something better. But for now, that was the only new position in the portfolio today. All right, let's go from lowest to highest of what we own. Coin continues to just be a beast. We trimmed some into strength last week, and it just keeps going higher, riding this 8-day exponential moving average higher, along with while BITO bases the Bitcoin stocks just taking off. Let's show a couple other ones. MSTR is one up 11% today. Mara, M-A-R-A, 15% today, just a triple over the last 3 weeks. Kind of crazy, but it is what it is. And how about my favorite acronym for an ETF, WGMI, we gonna make it. So what that stands for, I guess that's a saying in the Bitcoin industry. I don't know. Up 12% today. All these ETFs that are tied to it have like the same holdings because there's not really that many. So they go up together, they come down together. But as of right now, up is the word. All right, next, FCX. 2 buys in this, both profitable, continues to work its way higher. If you follow us, you're well aware of the research Mike has done on copper and the miners and the need in the industry for more copper, and FCX is behaving just the way you would want it to. So it's a case where fundamentals and technicals align. That gives us a lot of confidence. LYV, after a sell-off last week, has bounced at that 90 breakout level and continues to work its way higher back above the 8-day moving average, which is where we want to see everything in a strong bull market. Path riding the 80 MA made a higher high but reversed. A lot of things gapped up at the open and then gave back some of the gains. GitLab, another one, made a higher high and then just reversed, but still trending above the 8 EMA. Another really disappointment of the day, ESTC, strong gap up on volume, but it was sold into. By the end of the day, the volume tapered off and it closed right at the 8-day exponential moving average. Snow, that 200 level, continues to act as resistance, although it's basing right above the top of that cup and handle. Good looking tight range, looking 3 weeks tightish on a weekly chart. That's Snow. Next up is NVIDIA. Tight range, not showing relative strength, but holding the 8-day exponential moving average. Second biggest position is Crowd. And position, I'm talking about individual tickers. Crowd just working its way higher, working again on a 3 weeks tight. And our largest position, AMD. Another good day today for AMD. This is leading big time, coming into the pivot plus 20% level, and some nice volume for the time of the year too. Let's take a look at, we also, NRGU is pulling back. We've got 3 buys on this. Our last buy is underwater, but nice tight formation and some relative strength coming into most energy related names. And those are the 2 sector ETFs, NRGU and BITO, and then the rest was individual positions. Anything else stand out today? How about Bros? Alex brought this to our attention late last week. He took a position. It's just right on the edge of liquidity for us, but it's very clearly being accumulated. And Uber, low volume, but broke above a little higher highs or lower highs, lower lows consolidation today. That's looking good. This is on our buy list if we get a low risk entry point. That's going to wrap it. As always, like to hear from you. The email is don@revereasset.com. The phone is 855 Real Wealth. That's 855-732-5932. If you're interested in becoming a client, email my partner, Dan Stewart, dan@revereasset.com. All comments on our YouTube channel are read and replied to. So feel free to. We're dropping on our percent of likes versus views. I don't like seeing that. We need to get those likes to help the algos pick up our content and get it into the streams of people that are looking for financial advice. Remember, it's not how much you make in the markets, it's how much of that you can keep. At Revere here, we see some really ugly portfolios that come in here. I'm talking like 25 mutual funds, which is just overkill. It's just job security and extra fees for the advisor. But when you realize that you don't need it and they're not going to do anything to protect the downside, and you catch on to what we're talking about, put the pedal down when the wind is at your back, settle down when the wind is in your face. That's what we do here at Revere. As I said, it's not how much you make, it's not how, in the markets, it's how much you can keep. 2 trading days left in the year. And with that, I will wrap up the video for Wednesday, 12/27. This is Don Vandenbord with Revere Asset Management, telling it like it is. Thanks for listening and have a great day.